Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Thursday, February 11th. Firstly, let's take a look at the performance of the various equities markets and just taking a look at the alternative markets here for investment, namely gold and bonds. And firstly, the first three or four columns here represent the return for today for the equities market. The first is the Russell 2000. It was a down 1.01%. The Dow was the strongest underperformer today, down 1.6%. The S&P down 1.23%, and the Nasdaq 100 performed relatively well, down only 0.1%. Interestingly, if we look at the VIX indicator here, and the VIX was up very sharply, reflecting quite some fear for the equities market today. But we're seeing here in these other columns where the flow of capital has been to, and firstly to gold as a safe haven. Gold was up 4.02%. We're using the GLD ETF here, and also TLT, which represents the 20-plus year Treasury bonds, that was up 0.7%. And we'll take a look at their charts later and see how they are certainly still solidly outperforming the equities markets. So firstly to the S&P. And here we see a change of trend today. This current candle has made a lower high and a lower low, and that was off the back of a change of trend to the upside from the previous day's trading. But on that day, the sellers had control of the market, and there was every likelihood that we were going to see the trend change back to the downside. Very strong resistance at 1858, 1867. The large shadow on the top of this candle highlighted the loss of commitment, or the lack of commitment, from the buyers on that change of trend. Also, the area very close to the Tenkan-sen resistance coming into play, as we thought there might be some strong resistance there. Today we've seen the sellers continue in the market, changing the trend to the downside, but shadow on the bottom highlights rejection from the 1813 level of support, and this is a crucial area for this market over the next few days, and it's an area where we saw the market bounce from, and we saw the sellers previously lose commitment down around there. For today's candle, a black body has formed, so there's been some net momentum to the downside between the open and the close, but importantly the sellers failed to close with control of the market, and the 3 of the last 4 trading days the sellers have failed to close with control, and that just tends to suggest that the sellers may be starting to get a little bit weaker, but what we're not seeing is any strength from the buyers. On that rally from the previous day, on that first term time frame, the buyers did lose commitment and they did fail to take control. So we'd like to see the buyers come back into the market and show some strength if we are going to see the market trade higher. As I've mentioned, 1813 is important support, but also down around that 1800 round number, that could be crucial support as well. In terms of Ichimoku, the market is bearish in all 3 time frames, but as previously mentioned, we are watching for a potential double bottom pattern. We saw a similar type of pattern potential for a similar type of pattern to form in Nymex Oil, but here we have the trend to the downside, the 2 troughs roughly around the same area, the intervening peak, and the pattern won't be completed, however, until we close above that intervening peak. So if this pattern is going to form, we do need to see the market close substantially higher than where it's trading at the moment. So this is some very important support where the market's trading at the moment. So we are just testing down around that previous trough that occurred about 2 or so weeks ago. Also, for completion of this pattern, the market would need to be strong enough to close up above the Kijun-sen and the Tenkan-sen, which may present as very strong resistance. So we are going to need to see some strength from this market if we are going to see development of this pattern. Just looking to the bands, and here we do see continued negative activity down below the lower band, suggesting a strong negative tone to this market. Previously, 2 days prior to today, we saw the market testing, or 3 days actually, testing at or just above that lower band and being rejected from there. If the market does attempt to rally, that is an area that we will need to watch, and I suggest that if we do see the market close in a bullish manner above the band, that lower band, we could see the market test at least to the middle of the bands around 1887 at the moment, or even perhaps up to the top of the bands around 1917. Just looking quickly at the Nasdaq 100, and as we saw on the performance charts, it was the better performer, and we see a white body candle forming. So the buyers have made some net momentum to the upside, even though the trend has changed to the downside, and the buyers have closed with very weak control. And this suggests that there is potential for the trend to change back to the upside. Having said that, however, 4,000 round number just above, and it has held as resistance for the previous day's trading and the day prior to that. Also, a window that was opened up about 4 or 5 days ago has technically been closed, but the market failed to close above that window, so it is still exerting some effect in the market, and suggesting that the market may continue in play until we do close above that window. But that would also mean that the market would close above that round number 4,000 resistance. If we do see the market rally through those areas, then there is potentially strong resistance around 4089 at the bottom of that highlighted yellow zone, and with the Tenkan-sen trading around there, the resistance is likely to be quite strong. That suggests that if we do see a rally in this market, it may only be temporary. Moving next to the VIX indicator, and here we see the VIX up above its moving average and up above its upper band, suggesting that the VIX is quite strong. With the VIX being at these high levels, there is still some fear in the market, and our VIX oscillator remains above that 5% level we broke out up above there, which is usually quite a warning that the market is about to sell off. And price action, the VIX oscillator does remain up above that level and above its average. Looking at the RSI of the VIX, it is moving into an oversold area. And very often when we move into that oversold area, once we see the sellers start to lose their strength in terms of price action, we do tend to see the end of that downtrend. So there is good potential for a change of the downtrend and a new uptrend to form here on a very short-term basis. The sellers have lost control, and combined with the VIX moving into an oversold area, it does suggest that there is potential for a higher high and a higher low. Looking at the advanced decline line, however, that still remains well below the 50-day moving average, and also down below the lower band here, and suggesting that there still is a strong negative tone. But just looking a little overextended in the depth away from that lower band, and suggesting that we certainly could see a change of trend in that first term time frame back to the upside off the back of the sellers losing commitment. And just moving to a composite indicator of trend performance and trend momentum, and classifying the S&P 500 stocks into an improving quadrant, leading quadrant, weakening quadrant, and lagging quadrant. And we see the lagging quadrant continuing to trend higher. 52% of stocks in the S&P 500 are lagging in terms of trend performance, and it's suggesting that we certainly could see further upside as the percentage of stocks that are improving is moving down, and also the percentage of stocks that are leading down to 19%. Also, with our Ichimoku breadth indicators, and the percentage of stocks that are above the Tenkan-sen has moved down to a very low level, down around 15%. The percentage that are above the Kijun-sen have moved down to 29%, and the percentage of stocks that are above the cloud have moved down to a low of 15%. And this is suggesting that there certainly is still quite some bearishness in this market. And the percentage of stocks that are below the cloud has moved to 71%, which is a fairly high level. One would expect that if it does continue to increase over the next few days, after a couple of days, and perhaps if we do move to higher levels, we are likely to see a correction back to the upside, as sustained levels above 70 are not that common, and they tend to coincide with the end of the strong downswings. Now just moving to gold futures, and this is where the action has been. Very strong bullish candle for today's trading. The market breaking out up above the round number 1200 in a strong bullish manner suggests that there certainly has been a flight of capital away from equities markets to the gold space. This is reflected in the VIX indicator moving higher. The fear is greater, and investors are using gold as a safe haven in case we do see continued strong sell-off in the equities market. Having said that, however, the market has found resistance up above the 1250 area. It is an area that we should be watching very closely. The trend is up in all three timeframes, but looking at the depth of price action away from the cloud, it is looking very, very overextended, and also the depth of the Chica span away from the price action. And it is certainly suggesting that gold futures are overdue for a correction, and it certainly wouldn't surprise after something of an extreme day that we've seen today if we did see a retracement of this strong uptrend. Looking to the 1200 level, if the market does sell off down to there, to hold as very strong support, and if we do poke down through there, the Tenkan-sen at 1193 should hold as strong support as well. And just looking at the band chart here with gold futures and well up above the upper band and looking extreme, the bands are very wide apart following that squeeze that we saw about a month or so ago, and the market certainly is looking as though it's overdue for a correction. If we do correct here on these charts, looking to 1189 at the upper band at the moment to hold as support. Next to Nymex Oil on the Ichimoku charts, and here we see a continuation of the trend to the downside. This second last candle is the one that has completed trading. We see formation of a doji type candle where the sellers have lost commitment down below their $26.66 level. The sellers have failed to continue with control that they had for the previous 3 consecutive trading days, and this suggests a good possibility of a change of trend. And already in this new trading session we are seeing the suggestion we will see that change of trend to the upside. Any rally may find resistance at the 28.42 level, as we saw for the previous day's trading, and if the market can trade through there, we may find resistance around the 29.54 level or around the Tenkan-sen, which is trading very close to the round number $30. And just looking at that pattern, that double bottom pattern that had potential to form, the previous day's trading took out that low, and today we've extended down further through there, negating that pattern. There was an opportunity here if the buyers were strong enough to rally, but that pattern would not have been complete until we closed above that intervening peak, and the trough was made significantly lower, so that pattern now is no longer in play. And finally, looking at the Fibonacci retracement of this previous just one first time frame uptrend, 1 or 2 candles, and comparing the current downtrend to that previous downtrend in terms of Fibonacci. And here we're in expansive mode of that. We've traded through the 100% level. We've tested to and through the 161.8% level today. Price action has been rejected from there, with the sellers losing commitment, the buyers taking control, and this suggests that there is good potential for the change of trend that we're starting to see form in this new session.